Thank you. Welcome once again. This is Seewing Yi from the Yi Evolution Network. And today I'm going to share with you this week's current batch of inventory listings. By the way, before I begin, you, wherever you're listening, whatever location, it does not matter. Any of the 50 states you're living in, you have the ability to remotely, passively, to create a real estate portfolio from scratch. Not only that, you could be an experienced investor or could be a newbie, a beginner, an inexperienced investor. You do not need to spend the next 5 to 10 years doing research, searching YouTube videos for continuing research. As long as you have the motivation and the commitment and the financial resources to build your portfolio over time. This is not a quick rich scheme. Never has been, never will. It's get rich slowly. It's get rich one rental at a time. Why I say you could be a newbie having very limited realistic knowledge, you can still do this because you buying rental properties in the specific areas of the country remotely using a turnkey approach. This turnkey real estate investing has been done for you. It's built up by a very reputable turnkey provider at a specific location in the country. They have done all the work. They have vetted all the information. Everything is turnkey, everything under one umbrella. I will share you more details. But without further ado, let me share my screen. Let's get it going, right? So this week's listing, again, approximately a week to 10 days, you will receive a new batch of properties already to go, regardless of where you live. So anyway, so let's, this is this week. This batch of inventory is the rehab and the maintenance is about to conclude. Make within a week to 2 weeks, a lot of these properties I'm showing you are ready to go, are ready to be rented, if not already rented by tenants, is ready. The rehab is all complete. It's done in-house, everything turnkey, done on your behalf. So without further ado, I'm very excited to report to you there are some great, extremely high cash flow properties. And I'm going to show you an exit strategy toward the end to something that you may not ever heard of, even for experienced investors out there. The exit strategy that I'm going to share with you on this video is very, very unique, and just follow me and follow the journey, and let's get it going. So there's no such thing as a national real estate market. All real estate is local. There are more than 400 metropolitan statistical areas in the country. There are over 3,000 counties, and there are over 9,000 cities in the USA. Cash flow is king. Cash is not king. Cash flow rental property is king. Okay, yeah. Have some cash reserve, right, to address any unforeseen situations, emergencies, what have you. But don't over leverage. Ideal world is 25% down payment on each property. That's the best way to leverage your real estate portfolio. Financing can disappear. The current financing, we have a lender that's willing to finance any loan amount, which is, you can't say that for most lenders, especially in the investment real estate market. So these unique financing strategies can disappear anytime. So urgency and priority is the key. Of course, you have to buy in the right market. Okay, as I said earlier, you have to buy in a right specific neighborhood, right in a specific street, in a specific city or suburbs, location, the whole 9 yards. Okay, so real estate is local. Let me share that with you. And the property you're going to see or have these characteristics. You have the ability, one rental at a time, over the next year or more, you can scale your portfolio. What I mean, you can buy 1, 2, 3, 4, 5 properties based on your financial resources. And based on your motivation, you can go as fast as you want, as slow as you want. Doesn't matter if you're a newbie or an experienced artistic investor. It does not matter. So all this property I'm about to show you these properties meets the appraisal. This is very important. They are appraised correctly. Okay, they are not they are appraised within the market value, as verified by independent appraisers upon you open up escrow on this type of investment properties. They are all off market. They are not in the multiple listing service. These are turnkey, all rehab property. You don't pay a penny on the rehab. The turnkey provider will do all that. You will get once you open up escrow, you will get a third-party inspection report with flying colors most of the time. Okay? Property management in place, professional property management in place. They will do all the dirty work for you for years and years to come. You can become very passive. You can make money while you are sleeping. That's right. You can make money while you're sleeping. Very little effort on your time for years to come. Does not matter how many properties you buy. As I said earlier, these properties typically require 20 to 25% down payment. And the interest rate I'm going to use, I know interest rate changes all the time, but regardless, investment interest rate is a little bit higher than owner-occupied interest rate. But you have a lot of options as an investor. You can buy the points. You can do a points buy down to get a lower interest rate so you can cash flow better. Although you don't have to. I'm not going to discuss the details of many investment loan programs. Suffice to say, with 20 to 25% down payment, even with today's interest rate environment, you can still cash flow with this down payment. These properties are normally pre-leased. Even if they're not, they're easy to rent. So we have done this for many, many years, invest out of state remotely, passively, and successfully. Over the past 20 years, many investors have succeeded in this type of investment methodology. The turnkey provider on the ground, they have been in the business for more than 30 years. So credibility, reputation, transparency is all available from the source of these properties. Okay. By the way, the Realtor.com just came recently, a few days ago, just came in with a top 10 markets. Realtor.com came out with a top 10 market, and the C number 5, Buffalo, Niagara Falls, New York is at number 5. So it's just a projection by a very credible resource, Realtor.com, and they say the 2023 growth Buffalo area is at 6%, and so to be very impressive to be in the top 10 real estate markets for 2023, as indicated by Realtor.com. This is a typical property. It's a very old property, but the foundation is good. The bones are good. This type of property has been rehabbed a number of times over the years. It's turnkey, is rehabbed properly, is rent ready, everything. All the major things has been fixed up. Let me share with you the typical interior of any of these type of properties. It's been very well done by a very reputable rehab team, contract team, all in place under one umbrella. They have done a very credible job with all these kind of properties for years and years and years. So bathroom, see, look at a quick look, very nice, very livable, very clean, perfect for the tenants. Okay, this is one the living room, this is the living room, bedroom. So I'm going to share with you pro forma. I'm not going to spend too much time on the numbers because it's going to take too long. Suffice to say, if you look at the upper right-hand corner, some of you know what I'm talking about, but many of you do not. But again, the numbers are very attractive. Live where you want to live, invest where the numbers make sense. And here are the first of several properties that are available for out-of-state investors, regardless of where you live. And suffice to say, again, anytime the rent-to-value ratio is more than 1%, you have a very high cash flow possibility with 20 to 25% down payment. Again, capitalization rate is 9.1%. Cash on cash return is double digit, 11%. Very, okay. Again, I'm not going to go over the numbers, but the numbers are extremely good. You're not going to find any type of real estate houses you can get this type of numbers. All right, and this first property is $60,000, and you put 25% down payment with an interest rate of 6.3%. Again, you're using points. You buy down the points, so you pay some money to buy down the points, so you can have a better interest rate. So the assumption I'm using on this portfolio is 6.3%. It's more, could be more, could be less, depending on your credit, so far and so forth. It's an amazing $60,000 single family home at 25% down payment. Out of pocket, including closing costs, is less than 20 grand. So with a 20 grand, you're able to buy a $60,000 property, single family home that rents for $650 per month gross rent. You minus the taxes, all the debt obligation, all your debt service, monthly taxes, insurance, property management fee of 10%, maintenance costs around, this is all the presumption, maintenance cost is around 4% annually against the rent, and then vacancy rate 3%, management fee 10%, and the appreciation projection is 3%, very cautiously. So your gross rent minus your debt service right here, and minus your mortgage payment, your mortgage payment of $279 equals monthly net cash flow of $134, approximately monthly positive net cash flow monthly. Again, I'm not going to go over too much detail. It'll take too long. Suffice to say, your first year total return on investment is 23%. How I derive at this figure: annual net cash flow plus principal reduction benefits plus 3% annual appreciation the first year. These three numbers equals 4421, which is gross equity income, divided by your total down payment, 19,000, equals total return at the end of the first year, 23%. And I'm not going to talk about again, you need to buy this property, invest for the long term, at least 10 years or even more. If the first year's total return is 23%, imagine the multiple returns you're going to get year over year, second, third, fourth, and fifth, and sixth year. I'll be more than happy to show you the software about the internal rate of return. But again, I have a lot to cover, so I'm not going to go over the details. Does that make sense? All right, so very good numbers, very good cash flow, and a lot more. Second property is also a single family home, all ready to go. Only $73,000, 500. You put 25% down payment plus closing costs equals a little bit less than 24 grand total out of pocket on the leverage of financing. It rents for $950 minus vacancy cost minus the whole debt service I just spoke of. I'm not going to go over any more details. Takes too long. Then you finance at a 6.3% 30-year fixed rate mortgage as an investor. So your mortgage payment per month is $341. So your gross rent is $950 per month minus your total debt service, including a mortgage. You still have a positive net cash flow of $255. Again, all the metrics look very strong, very above the blueprint. You're not going to find anywhere in the U.S. where you can find this type of returns. Okay, and again, you buy in the right area. You buy in the Midwest. In this case, Buffalo, Niagara Falls, New York. So amazing first year return of 25%, and great. Again, anytime you see rental value ratio is higher than 1%, anytime you see a capitalization rate of higher than 6%, anytime you see a cash on cash return of a double digit, and a total return on your investment on an annual basis initially at least 25%. Wow, you have a winner. There's a triple crown. Okay, the third property, another single family home at $84,000, and you do your 25% down payment, 21 grand plus closing costs, 4 grand equal total out of pocket at 26,000. Then you have a very high rent of $1,200 gross rent minus all this debt service plus your mortgage payment, which is $390 equals. Look at this. I mean, this is mind-boggling. Your monthly net cash flow is $472. Look at the metrics. Look at the blueprint, the benchmark metrics, way higher than normal. Again, some of you don't know what I'm talking about, but just follow me from a high level. Rent to value ratio 1.4, capitalization rate 12.3%, cash on cash return 22%, total ROI 34%, first year only. This is mind-boggling. All right, you're not going to find this type of great numbers anywhere in the country, especially from a turnkey provider. And then I think I'm concluding the fourth one, the final one, not sure. This is happened to be a duplex, two sides, right? You have two families renting from on each side, duplex. So residential investing is basically 1 to 4 unit, single family home, duplex, triplex, or fourplex. This is the bread and butter residential housing investing. This is the best type of portfolio, in my opinion. Why? Because I've been doing it for several decades. I've been a real estate investor for almost 30 years. I've been helping real estate investors to buy out-of-state properties for more than 2 decades. Thousands of investors have done this type of portfolio long term, and if they can do it, you can do it. This duplex is a mere $84,000. That's right, both sides, both doors. You put your 25% down payment, 21,000 plus closing costs. Total out of pocket is 26 grand. The total rent on both doors is $1,450. So per door is a little bit less than $700 per month on each door, on each side, if you will. So again, you minus all the monthly debt service, also your 30-year fixed rate mortgage at 6.3%, which is your mortgage at $390. At the end of the day, $1,450 gross rent minus your total monthly expenses and debt service, you're gonna net monthly a whopping $609 cash flow. Everything else is gravy. Look at the rent to value ratio, way more than 1% ratio, which is mind-boggling. 1.7% rent to value ratio, capitalization rate 14.3%. 6% is a benchmark for cash flow, for capitalization rate. Cash on cash return 28%, mind-boggling. Okay, and total return at the first year 41%. Wow, 41% first year, because amazing. Okay, monthly net cash flow is more than $600. But wait, there's more. There's a lot more. Today we will discuss just one of many, I call it exit strategies. There are many exit strategies, right? You can refinance every few years to get cash out tax-free, to buy more rental property by leveraging. You could sell your property, pay your capital gain, and pocket the money and retire. You can do a 1031 tax-deferred exchange, sell your existing rental property, do not pay capital gains tax, and as long as you can identify replacement properties using the profit and not pay capital gains tax. Many strategies, but today I will talk about paying off your debts early. What I mean by that? Well, just listen. What you can do is initially you have a great 30-year mortgage, fixed rate mortgage, right? So I'm going to show you how to accelerate and pay off the 30-year fixed rate mortgage. How? You pay one extra principal per month, right? Normally, the traditional concept is you pay one extra principal per year, your 30-year mortgage will decrease to about 12 years. But again, no one taught you how to pay one extra principal per month. That means 12 principal, where you pay your mortgage on each of your rental property 12 times, once per month. And then your 30-year will become, you can pay it off all the loans from all your rental properties in about 5 to 7 years. By the way, all the positive cash flow that you're getting every single month that we talked about, if you're not ready to retire, which I assume not until 10, 20, 30 years from now, the extra monthly cash flow, what you're going to do? You're going to spend it? No, you're not ready to retire yet. So what you could do is to use the monthly cash flow from each of the rental property and pay it extra to the principal of your 30-year mortgage once per month. And then each of your rental property will be paid off around 5 to 7 years instead of 30 years. Does that make sense? I mean, this is pretty simple explanation. I'm sure nobody have taught you, whether you are a newbie, whether you are experienced investor. I had to assume no one taught you about these kind of things. Okay, see, that's the value of our video and our presentation by virtue of you took the time to watch this video, right? So what the end result? The end result is here's your current first year monthly cash flow for all the four properties in which I have identified, right? If you look at that pro forma cash flow sheet, which I just show you, you will know that monthly net cash flow, monthly 175 on house number 1, 255 house number 2, 472 house number 3, and 609 property number 4 equal total monthly cash flow of $1,500 and $1,511, right? Okay, follow me, okay? Keep following me. Okay, digest that for a moment. That's pretty nice numbers right off the bat, right? Your cash flow right at the beginning. In 7 years, in 5 to 7 years, I'm going to use a conservative estimate. 7 years, your mortgage is debt free because you're paying extra principal on each mortgage, as I explained to you. So your current monthly 4 mortgages with all 4 houses, but these are the mortgages, right? But in 7 years, you have no more mortgage. So not needing to pay the mortgage, you have this additional monthly amount of cash flow you could free up by being free and clear. So without the 30-year mortgage, at year 7, house number 1, you can free up extra 279, house number 2, 341, house number 3, 390, house number 4, 390. So you could free up additional $1,400 by not having those mortgages on those 4 rental properties. There's more. So let's do some simple calculation. Your regular monthly cash flow with 1511 times 12 months. So right now you're getting annual net cash flow of a little bit more than 18 grand by doing nothing, just by collecting rent and your property management, doing all, collecting the rent and minus all your debt service, annual 18 grand. That's not too bad. This is only the first year. There's more. The free up money you're able to get, as I stated earlier, by not having a mortgage at year 7, approximately is 1,400. So 1511 plus 1,400. So your new monthly passive income is almost 3,000, 2,911 to be exact. Okay, let's take a step back. Rental income usually increase based on inflation. But in the past few years, especially during the pandemic, the past several years, the national rental growth has skyrocketed. It depends on what area. In Florida, the rent has grown like 20 to 30% in the past couple of years, or even more for that matter. So every local area is different, but on the national trend, we have already seen a double-digit rental increases because a lot of people cannot afford to buy a home. In case you have not heard, we are at the 40-year low in terms of home affordability. So the rental market is the strongest rental market in history. Okay, there are more renters. This is a renter's nation. As a landlord, as an investor, you, for years to come, starting now on, going to have even better rental situation because there are bidding war for renters. It all depends on what areas. So the rent will increase based on inflation. So you can increase your rent, you can have more cash flow because inflation, cost of living, all part of the equation. So the rental national growth has skyrocketed over the past few years. Yes, they have to come down. They can't stay at double-digit, triple-digit rental increases forever. It has to come down to normal. What's normal? Who knows? 5, 6, 7% annual rent increases. in alignment with inflation. That's pretty reasonable estimate. So let's use a cautious approach. Let's use a factor of 5% annual rent increases. Again, inflation, big important word. 7 years from now, your current monthly net cash flow of all the 4 properties is already 1511. So based on 5% annual rent increases in 7 years, this 1511 will become 2167 monthly, right? Simple mathematics. So at the beginning of year 7, your new adjusted rental based on 5% increases year over year, plus your $1,400 of additional cash flow because you no longer have to pay your mortgage, you pay it off accelerated in 5 to 7 years. So your new monthly passive income on your real estate portfolio is $3,567. $3,700 multiplied by 12, we're talking almost $40,000 of annual net passive income. That, some of you can retire with just this monthly amount, depending on, your spending calculation during retirement, if you will. By the way, I have not even spoken about the tax benefit or the 3 to 5% annual appreciation. I'm not even going to talk about equity growth. That's bonus. In fact, rental property is history's most powerful and proven multi-dimensional real estate asset class. It is the world's greatest wealth building investment vehicle. Why? Because there are 5 ways to make money. Is it 4 ways? I forgot. I lost count. There's so many ways. No asset class can give you that. Some people think, oh, cash flow, cash flow. Yes, cash flow is important. Cash flow is not that high, relatively speaking, compared to the historical average. But this Midwest portfolio that I just talked to you about is meeting the expectation, even with a high interest rate and whatever. So as a real estate investor, you're not buying rental properties based on interest rate. You're buying based on cash flow and all the numerical numbers which I've discussed, which is what? Rent to value ratio, cash on cash return, capitalization rate, and total ROI. As an investor, that's how you calculate the numbers. And most people, even experienced investors, they don't know how to calculate the numbers, especially newbies. Newbies, you have a long learning curve. But buying turnkey properties, the curve is not that great, even for newbies. You can do this. The things I have discussed on this video, already can do it, even if you're very, very new at this game. Okay, the other benefit of investing not just cash flow is tax benefit, depreciation, paper loss, cost segregation, real estate pro status, cash out refinance, 1031 tax-free exchange. And of course, appreciation. I mean, if you invest for the long haul, your assets, your property will grow over time, regardless of the correction we are going through. Investing is a long game. It takes a while, right? So it's not a short-term flip. It's not a get-rich-quick scheme. And of course, you got the power of leverage, another benefit. 30-year fixed rate mortgage. There's no other country in the world that have all the great benefit you have with mortgages in the US. 30-year fixed rate mortgages. So many ways to make money: cash flow, passive income, tax benefit, appreciation, leverage, equity growth. Mind-boggling. All right, so I'm not gonna go over this kind of other philosophy. Invest in necessities, which single family home mainly are the great business model, is the bread and butter. Have your long-term goal written in place, invest for the long term, don't gamble, don't speculate. Okay, invest directly, buy property under your own name or in the name of your IRA. Do not partner, do not go to the speculation, do not go buy syndications, because you could be buying from a scam syndication. You put your money, you don't know where your money going. Anyway, you work with a team, with a trusted team, trusted network trusted professional property management. And finally, be fearful when others are greedy, and be greedy when others are fearful. There's a lot of fear in the marketplace right now. And so you have to think contrarian. You have to think like Warren Buffett. You should know who is Warren Buffett. Am I right? Am I wrong? Well, thank you so much for listening. This is Seewing Yi. Hope you can get a lot out of this. And of course, subscribe to my YouTube channel. And also click the like button and subscribe to my email newsletter so you can receive weekly newsletters that can benefit. You can become a great real estate investor. Thank you so much. This is Seewing Yi. Have a nice day. Bye-bye.